Hi. There are some special transactions in GST law which need your special attention. So let us see one by one, like unregistered persons, composition scheme, UAN holders, reverse charge method, and input service distributor, that is IST. So we will see one by one, don't worry, you will get a clear understanding. First of all, unregistered persons. See, there are two types of customers for any business. One is registered customers. The second one is unregistered customers. Those who have successfully registered as per GST law and they have GST identification number, they are called registered customers or businesses, registered businesses. And transactions with them are called B2B transactions. And those who have not registered as per GST law or normal customers or individuals are called as unregistered customers. So transactions with them are called B2C, business to customer transactions. Okay, so in any case, if you are dealing with any unregistered customer, it is called B2C transaction. Okay, and the specialty of B2C transaction is the customer will be paying the tax GST to the business person, and the business person has to pay that GST to the government, and that becomes the government's income. In case of B2B transaction, the government doesn't get any income because of the input tax credit facility available to the registered businesses. That we will see later. Then, the second category is composition scheme persons. For composition scheme, there is a special formula. That is turnover multiplied by special tax rate. The composition scheme persons doesn't have any power to collect GST from their customers. They need to issue bill of supply, and they don't have any right to do any interstate supplies or any such additional rights. This is suitable to small business persons. And in the normal scenario, the tax calculation formula is output tax minus input tax. But in composition scheme, as I told, turnover multiplied by special tax rate is the formula. There is a slab for getting or applying for composition scheme. If the aggregate turnover of the business is below 1.5 crores for manufacturers or food or restaurant services or traders or agents, etc., it is 1.5 crores for the normal states. And if it is special category states, it is 75 lakhs. For businesses having turnover more than this limit, don't have any eligibility to go for composition scheme. And in case of service providers, this limit is 50 lakhs. So let us see some cases where composition scheme can be availed. Like manufacturer, their rate is 0.5% plus 0.5%, that is CGST and SGST rates. Then other suppliers like traders, agents for supply of goods, etc., for them the same rate 0.5% plus 0.5%. Then food or restaurant services 2.5% plus 2.5%. Usually you can see a lot of hotels, okay, with the composition scheme. Next time you go to any hotel and get the bill, then you please check whether it is composition scheme. They should not collect any GST from you. Then other service providers, say usual service providers like consultancy or architects or internet, whatever it is. So for them 3% plus 3%. Okay. See, did you notice one thing? There is no IGST rate is there. Why? See, when you go for composition scheme, you don't have any freedom to do any interstate sale. You can do sale only in your state. Okay, intrastate only you can do. not interstate. Then let us take a small case and analyze it. Then you will get a clear understanding. Mr. Amar started a hotel come restaurant in Bangalore. His turnover is expected to be 50 lakhs in the present year. He asks you whether he need to take normal GST registration or composition scheme. So it is a hotel. The turnover is 50 lakhs. You take it like that. Then he has paid GST rupees 4,50,000 on purchasing some machineries and equipment. So this is called the input tax credit. Will he get the same deducted from his total tax liability? So he asked the second question. Then if the turnover crosses 1.5 crores, that is the third question, what he need to do? So I hope you have understood the situation. The hotel is there in Bangalore. Their turnover is 50 lakhs. He asks you whether he can go for composition scheme and what he need to do with the GST he paid to the suppliers, that is 4,50,000, and what he need to do when the turnover crosses 1.5 crores. So here the solution is like this. See, his turnover at present is 50 lakhs, which is below 1.5 crores turnover. So he can go for composition scheme, that is turnover multiplied by GST rate 5%. That is special tax rate for hotels. Or he can also go for normal scheme, that is output tax minus input tax formula he need to apply. Okay, so as his turnover is below 50 lakhs, he can go for composition. But when his turnover is exceeding 1.5 crores turnover, he cannot go for composition scheme. He should go only for normal scheme. Then let us go in detail to understand the solution. In the normal scheme, he need to collect tax from the customers. He should issue a tax invoice and he can claim input tax credit. Usually for hotels and all, it may be 18%. So he need to collect tax from customers on that rate. And input tax credit 4,50,000, which he paid to his suppliers when he purchased the machineries or equipments, he can claim as input tax credit. So that is the usual scenario in the normal scheme. But when you go for composition scheme, the business is not permitted to collect tax from customers or cannot issue tax invoice. They should issue only bill of supply. Bill of supply I have already taught you. The bill without GST rate or amount. Then he need to calculate the tax he need to pay at the end of the month. And suppose his turnover is 50 lakhs multiplied by 5%. Okay, so how much it comes? 2,50,000. Okay, so that tax he need to pay. Then he will not get the permission to avail input tax credit. Okay, then when his turnover exceeds 1.5 crores, he has to go for normal scheme. He cannot continue the composition scheme. So this is a scenario. Hope this is clear. And the composition scheme persons has to go for some rules, like they cannot do interstate sales. Okay, they cannot claim input tax credit. All those things are there. So there are advantages and disadvantages. Advantage, like their return is very simple. Okay, they have one annual return. So all these points counts. Okay, then the third category is UIN holders, unique identity number. Any specialized agency of the United Nations organization or any multilateral financial institution or organization as notified under the United Nations Privileges and Immunities Act 1947, consulate or embassy of foreign countries, and any other class of persons which are notified by the government. All these persons will get a unique identity number. And what is the procedure? A recommendation from Ministry of External Affairs, Government of India is required for accepting their registration application. Then the taxable supplier who is supplying goods and services to these embassies or such organizations is expected to mention the unique identity number in their invoice. Then they should treat such supplies supplies to another registered person like B2B. Okay, and the advantage for such organization is they can claim refund. Suppose one US embassy is there in Delhi. They are purchasing a lot of goods and services from various suppliers in Delhi. Later, they can get the refund of GST paid to various suppliers. Okay, so that is a specialty of the UAN holders. Then, the fourth one is inward supply, that is RCM, reverse charge mechanism. We have seen RCM in many places. Okay, see here the specialty is where only value of goods is paid to the suppliers, and the GST amount has to be paid by the buyer directly to the government. So one invoice should be issued by the buyer to the supplier, that is called self-generated tax invoice, and also they need to issue a payment voucher for the value given to the supplier. And also note that consolidated invoices can be issued under RCM, and the invoice will act as a document for claiming input tax credit. So whatever GST we are paying, we can claim it as input tax credit. So this is a clear graph explaining what is the difference between normal mechanism and reverse charge mechanism. In the normal mechanism, the receiver is paying to supplier with the GST, the price include GST. Later, the supplier pay that GST collected to the government. But in the reverse charge mechanism, the supplier is not getting GST from the receiver, and the receiver is directly depositing or paying that GST to the government. Okay, so that is a difference. So let us see some specified goods like cashew nuts, BD wrapper leaves, tobacco leaves, silk and raw cotton, even second-hand cars. So such notified goods are there. For such notified goods, you have to take care that RCM applies, and you have to pay when you are purchasing any such notified goods, you have to pay directly to the government, GST directly to the government, not to the supplier. Then let us take an example here. A farmer brought cashew nuts to sold to a registered trader, and the amount is rupees 20,000. Here GST rate is 5%. So who has to collect and pay tax to the government, and is it the farmer or trader? Okay, so here the answer is the registered trader has to pay the amount for cashew nuts to the farmer. The value only the trader has to pay to the farmer, and the GST amount directly has to pay to the government. So 20,000 is the value of the cashew nuts, so that should be paid to the farmer, and the GST amount that is 1,000 rupees at 5%, that should be paid directly to the government by the trader. Now let us see some specified services are also there, like a goods transport agency, advocate, company director, music composer, photographer, insurance agent, etc. When you are purchasing any such services, you have to pay GST directly to the government. Okay, so that is these are the services specifically notified by the government. So let us see a case study here. Arvind Traders assigns transportation of goods to Patel Transporters, who is unregistered. Patel Transporters charges rupees 6,000 as charges. Okay, so here the GST rate is 18%. So what the Arvind Traders has to do? They need to pay 6,000 to Patel Transporters and GST directly to the government. And the fifth category is input service distributor. An input service distributor is a business which receives invoice for services used by its branches. Later, it distributes that input tax credit to various branches under them using a ISD invoice. And please note that the branches should be under the one organization with a single PAN. Let us take one example, then you will understand. See, the head office of the company is at Mumbai. There are other offices in Delhi, Hyderabad, Bangalore, and Chennai. Head office purchased a software. Bill was 10 lakhs, and GST charge is 1 lakh 80,000 at 18%. And the payment for the same was done by the head office only. So my question is whether this GST paid to the software supplier can be claimed only by the Mumbai head office, or it can be claimed by Delhi, Hyderabad, Bangalore, and Chennai. Let us see. See, the solution is, as all the branches are registered using the same PAN, they are part of the same organization and they are called distinct persons. Input tax credit should be distributed among all these branches, and invoice should be issued by the Mumbai head office to all these branches, that is ISD invoice. So the input tax credit should be distributed based on the turnover. Suppose Delhi has turnover of 50 lakhs, Hyderabad 40 lakhs, Bangalore 60 lakhs, Chennai 30 lakhs, and total turnover for the company is 1 lakh 80 lakhs, 180 lakhs, sorry. The ITSA distributor should be according to this turnover ratio, and it should be distributed according to 50,000, 40,000, 60,000, 30,000. So 1 lakh 80,000 should be distributed based on the turnover. Okay. Here I have treated like Mumbai head office is not active into sales and they don't have any turnover. So the entire input tax credit should be distributed among the branches only. And later branches, what they will do? They will deduct this input tax from their output tax, and only the balance will be paid as tax to the government. Okay, so hope you have understood various persons from this video. You have understood what is who is a unregistered person, composition scheme, what does it mean, UN holders, and RCM, and input service distributor. Thank you.